Top line story in the BNN Bloomberg newsroom remains focused on housing. Scotiabank is urging policymakers to take their time with any action to cool this country's hottest real estate markets. And the bank's chief economist is going a step further, saying the government shouldn't even consider applying a universal capital gains tax to the sale of principal residences. But there's some nuance to that call, with Scotia suggesting the feds could tax quick flips by speculators. For now, though, the bank says policymakers should wait and see how the spring selling season shakes out before rushing to intervene. For more on our top story, let's go to the report's author and Scotiabank's chief economist, Jean-François Perrault, is joining us now. Thank you so much for being with us. Let's first talk about your initial prescription, which is let's just wait and see how things play out. On a day where we're getting further confirmation, in Vancouver, for example, that the market is red hot, why argue for patience?
Well, there's a couple of reasons to argue that. I mean, the first is, as with many things, COVID is messing around with the data. It's messing around with how we're purchasing and considering, selling our properties. So, there's just a lot of uncertainty now with respect to what's going to happen with listings over the next little while. Obviously, sales are very strong. Listings aren't keeping up with that. And of course, as you head into a lockdown, as we are now in Ontario, Quebec, and some other provinces as well, it stands to reason that listings are going to be further constrained by that. But that's not that's kind of a temporary interruption in the short-term supply and demand until we get a better sense of what things look like when we're in a more normal state of the world. I think it's just a little bit more cautious to try and figure out what that situation might be in 2 or 3 or 4 months, when folks are more comfortable listing, folks are more comfortable having people walk through their places, and keep that in mind, as opposed to rushing to action now that we may or may not regret in a few weeks, a few months, depending on how that situation evolves.
Earlier in the show, we were kind of lamenting about how there's an absence of data to really get a firm grip on just how rampant are things like speculative activity. As an economist who kind of lives and breathes data to tell you a story of what's going on, do you share that frustration, or are there other ways to gauge, what percent of this is fundamental buying versus, speculation?
I mean, that's a tricky one. Speculation plays an important part in markets, right? Like, you want some degree of speculation. It helps, provide kind of the juice, if you will, to make markets work. It helps, for instance, in the development space on the condo side, for sure, for early buyers. But you're right. I mean, the reality is that we don't have very good data on real-time speculation. We know when people are buying. We don't know why they're buying very often. We'll know after the fact, if they sold in a month or 2 or 3 or 6, that they were probably more speculating than buying because they truly needed a house. So there is without any question a challenge on the data side. I mean, what we're relying on to some extent is there are data in some real estate markets on how quickly homes turn over, and that's an indication of whether kind of speculative activity is picking up. We have these data on the extent to which homes are sold over listing. That could be an indication of speculation, although that's an indication of a range of other things as well. But you're right. I mean, we are in this fundamental challenge of not really understanding whether or not speculation is an important driver of current house prices. I mean, you'd kind of naturally think that, given the increase in prices that we're seeing in some markets, right, which is 20-30% year on year, which is obviously extremely strong. But we're just kind of scratching our heads a little bit.
So, flashpoint topic of conversation is this principal residence, a capital gains exemption. People are not taxed on the gains of the homes that they currently live on, and you think it should remain that way. Make the case.
Yeah. Well, I mean, it's if you want to think of it from very first principles, people buy their homes for a range of reasons. Most of us buy our homes because it's our residence, it's an investment, it's something that we will live in for a very long period of time. It's something on which we whose returns we count on as part of our financial plan, whether that's to retire or to upgrade to a bigger house as your family grows. So throwing in a capital gains tax in the middle of that fundamentally alters the financial planning process for Canadians. It fundamentally alters, the lifetime decision-making process on the housing side as you find yourself maybe unable to move to a bigger place if if your family gets bigger, or hesitant to downsize as you get older. So there's this, it just goes to, like it or not, I mean, we have this regime we've had in place for a long time, and just changing it, I think, is just such an important shock to the financial well-being of Canadians it's just an extremely risky thing to do, I think.
And you highlight that housing is such a touch point for every single Canadian in this country, whether they own a home or whether they're renters. But from a broader perspective, there's also been growing concern that real estate just makes up too much as a percent of our economic activity, and now makes up more than it did, say, in the US during the peak of their financial crisis. And I wonder if, it's alarming, but I wonder if that too is transient, and that one of the reasons that it's up so much and makes up so much is because everything else got so depressed. And so perhaps as we work our way through the recovery, that will abate somewhat.
Potentially. I mean, it's important, I think, to distinguish between kind of recent market dynamics, which are principally driven by sales increasing much more rapidly than listings. So there's a listings deficit right now, which is obvious, and that's contributing to house price increases. There's no question about that. But the bigger challenge is on the housing side is simply, though, over the last number of years, with the population growth that we've seen, which has been largely fueled by immigration, population has increased much more rapidly than new home construction has. So as a result of that, the stock of housing has not kept up with the number of Canadians. So you've got this structural issue in the country where there's a deficit of housing, quite simply. And that's not just, it's not just, homeowners, it's, it applies to the rentals as well. It's, there's just not enough units per Canadian relative to, say, what we were seeing 3 years ago or before, and also relative to other countries. So it's important to kind of disentangle these very short run effects, which are linked to kind of market dynamics, versus the bigger picture kind of structural issue.